Today, we will talk about AB Trust. An AB trust is a joint trust created by a married couple for the purpose of minimizing estate taxes. It is formed with each spouse placing assets in the trust and naming as the final beneficiary any suitable person except the other spouse. The trust gets its name from the fact that it splits into two separate entities when one spouse dies. Trust A is the survivor's trust and Trust B is the decedent's trust. Estate taxes can bite deeply into a deceased person's assets. For example, consider a married couple that has an estate worth $20 million by the time one of the spouses dies. The surviving spouse is left with the whole $20 million, which is not taxed due to the unlimited marital deduction for assets flowing from a deceased spouse to a surviving spouse. However, when the other spouse dies, the taxable portion of the estate will be taxed at 40%, leaving $17.17 million for the beneficiaries. To circumvent an estate from being subject to such steep taxes, many married couples set up a trust under their last will and testaments called an AB trust, effectively minimizing estate taxes and deferring them until after the death of the surviving spouse. The A trust contains the surviving spouse's property interests, while the B trust enables the surviving spouse to live in the couple's house and draw income from the trust, provided these terms are stipulated in the trust. The federal tax exemption is transferable between married couples through a designation referred to as the portability of the estate tax exemption. If one spouse dies, the unused portion of their estate tax exemption can be transferred and added to the estate tax exemption of the surviving spouse. AB trusts are beneficial in estate planning to reduce taxes, and the surviving spouse has limited control over the decedent's trust. If the deceased spouse's estate falls under the amount of their tax exemption, then it may not be necessary to establish a survivor's trust. AB trusts were popular in the decades around the turn of the 21st century when the estate tax, which hadn't been adjusted for years, could be triggered on estates as small as $1 million or $2 million. Nowadays, only people with estates valued over $12.92 million will opt for an AB trust in 2023. With the portability provision, a surviving spouse can include the tax exemption of their late spouse, $25.84 million in 2023, which can be transferred tax-free to beneficiaries if filed within the 9-month period. The benefits of an AB trust include death tax exemptions, built-in trust protection, and the portability of exemption. Disadvantages include maintenance costs, complex structure, and the possibility of large capital gains taxes after both parties die. Here are one key takeaways. 1. An AB trust is a joint trust created by a married couple. Upon one spouse's death, the trust splits into a survivor portion, the A trust, and a bypass portion, the decedent's trust. Via the split, the AB trust effectively minimizes estate taxes and defers them until after the death of the surviving spouse. The surviving spouse has limited control over the decedent's trust, but the terms of the decedent's trust can be set to allow the surviving spouse to access the assets, and even draw income from them. AB trusts are no longer widely used as the estate tax exemption, which is now indexed to inflation, is sufficient for most estates. Hope this would help. Thanks for watching.